All right, so we're diving into some business and finance stuff today. You've sent over a pretty diverse stack here. Market analyses, we've got some CEO interviews, even some forum discussions. It's quite a mix.
It is,
And
yeah.
it feels like we're at a pretty interesting time for all this, right? New administration, markets are kind of volatile, and tech, as always, keeps things, well, interesting.
Definitely feels like an inflection point, yeah.
Yeah.
Lots of uncertainty, but I guess that means opportunity, too, depending on who you talk to.
Yeah, exactly. So let's jump right in. First up, this new administration. Everyone seems to be, I don't know, kind of holding their breath to see what the market's going to do.
Hmm.
It's giving me some serious Trump 2.0 vibes, like back in 2016, 2017.
Oh, yeah.
Do the sources think we're in for a repeat of that, like a sequel?
It's funny. The opinions are all over the place. Some analysts are like super bullish, especially about certain sectors like banking. One expert even gave JP Morgan an A rating for stability. Can you believe that?
Yeah.
They pointed to JP Morgan's cautious approach to loan growth, just a 1% increase. Sounds like Jamie Dimon is being very picky about what assets he wants.
Yeah, I mean, that sounds like a smart move in uncertain times. But I do remember things weren't exactly smooth sailing the whole time during Trump's first term, right?
Yeah.
Were there any potential risks or downsides mentioned, with this whole Trump 2.0 idea?
Right, yeah. It's not all sunshine and rainbows. That same expert who was praising JP Morgan, they also brought up some concerns about potential credit issues, maybe even as early as 2025.
Oh, wow. Okay.
And when it comes to mergers and acquisitions, they think any big moves are probably going to happen outside of the top 10 banks. The Fed and the Office of the Comptroller of the Currency, they probably wouldn't let those giants get any bigger.
Yeah, that makes sense. Too big to fail can turn into too big to manage pretty quickly.
Right.
What about some of the other players in finance, like Wells Fargo, for instance? They've been shrinking over the last few years. Do the sources see this new administration having an impact on them?
Oh, for sure. There's a lot of speculation about how a potential Trump administration would impact Wells Fargo. If they loosen up some of those regulatory constraints, Wells Fargo is going to have a big decision to make. Do they keep downsizing, or do they use this as an opportunity to, really expand?
That's a tough call.
It is.
Okay, hold on tight, because we're shifting gears now. From financial giants to the quantum realm. You included some analysis of the recent surge in quantum computing stocks. Rigetti Computing, for example, saw a massive 48% jump.
Yeah.
But not everyone's buying the hype, though, right? Even
Yeah.
some big names in tech, like Mark Zuckerberg and NVIDIA's Jensen Huang, they're skeptical.
Mm-hmm. And, their skepticism is not totally unfounded. Zuckerberg, for one, he thinks that quantum computing, while it has potential, it's just nowhere near ready to solve real-world problems, at least not at the scale that we need.
Okay.
He specifically mentioned the issue of qubit decoherence, which basically means that qubits lose their quantum properties too fast for complex calculations. It's a big hurdle.
So it's not just about making quantum computers bigger, it's about making them much more stable, too.
Yeah, exactly.
Got it. And what about Huang? What's his take on the current state of quantum computing?
Well, Huang, he's focused on GPUs and AI, right? So he sees quantum computing's impact on his world as pretty minimal, for now at least. He doesn't think it's going to replace the need for powerful traditional computing anytime soon.
Interesting.
He's more interested in what he calls accelerated computing, using CPUs and GPUs together to get better performance.
Okay, so we've got this clash then between the potential of quantum computing and the practical limitations that it's facing.
Mm-hmm.
But even if it's years away from, widespread use, there's one thing that really, it kind of creeps me out. The idea that quantum computers could break all our current encryption methods.
Yeah, it is a bit of a chilling thought.
It is.
Think about it. Online security, financial transactions, pretty much everything we do online. If quantum computing lives up to even half the hype, we're going to have to totally rethink cybersecurity from the ground up.
It's a whole new world. Okay, let's shift gears again to something a little closer to home for a lot of our listeners. Retirement planning. The sources you sent over, they point to a growing unease, I guess you could say, about the traditional 401k plan.
Yeah.
Low retirement confidence seems to be a big concern, and some experts are even saying that the 401k is, well, becoming obsolete.
The concerns aren't new, but they're definitely getting louder. The
Yeah.
problem is the 401k, it was designed for a workforce that's very different from what we have today.
Right.
People used to stay at one company their entire career, but now it's job hopping, the gig economy, it's much more fluid. And the 401k just hasn't kept up with that change.
So what's the alternative then? Are there any solutions being proposed that, fit this more fluid, dynamic workforce?
Well, one idea that's gaining some traction is the Portable Retirement Plan, or PRP. It's being pushed by Icon CEO Lori Rowley, who sees it as a potential answer for today's gig economy. The PRP, as the name suggests, is designed to be portable, so you can seamlessly move your retirement savings from job to job.
I like that.
It tries to address a lot of the 401k's shortcomings by being more flexible and user-friendly.
Yeah, it's really interesting to see these new ideas pop up, trying to adapt to the way people work now. Are there any examples from other countries that are doing retirement differently? Maybe some lessons we could learn?
Absolutely. Australia has their superannuation system, and the UK has their Nest. Superannuation, for example, is mandatory employer-funded retirement savings. Basically, it provides a safety net for all workers.
Interesting.
The UK's Nest is similar, focusing on auto-enrollment and easy portability. I think these models are really worth looking at. They offer valuable insights into how we can make retirement systems more robust and flexible.
It makes you wonder, is it time for the U.S. to just ditch the 401k completely and start fresh? Something that reflects how people work today.
It's a conversation we need to have. And it's not just about how these plans are structured, but also about financial literacy, empowering people to take control of their own retirement planning.
That's a great point. Speaking of taking control, this brings us to a topic that, honestly, I think a lot of people misunderstand. Debt. We all know bad debt is bad, but one of your sources, a pretty seasoned real estate investor, they shared a story about how even good debt can turn sour.
Oh, yeah.
They talked about how leverage, even for investments that seem safe, can backfire, and in a big way.
Yeah, that's important. It's easy to get caught up in the good debt hype, especially for things like real estate or starting a business. But the reality is all debt comes with risk, right? Interest rates change, markets shift, unexpected stuff happens.
Exactly.
Even the best laid plans can fall apart.
Their story really highlighted the importance of knowing the true cost of leverage and being ready for things to go wrong. It's not just about potential gains, but also about managing the risk.
Couldn't agree more. It's all about finding that balance. Leverage can help you build wealth, but it's a double-edged sword.
Right.
Understanding interest rates, your cash flow, having a solid plan for managing debt, that's crucial for anyone using leverage.
And this brings up a good question for all of you listening. Are you in control of your debt, or is it controlling you?
Everyone should ask themselves that. Sometimes the best move is to take a step back, focus on building a solid financial foundation. That can be more effective in the long run than chasing quick wins with borrowed money.
That's a great point to think about. So we've covered a lot in this first part of our deep dive. We talked about market volatility and the Trump 2.0 effect, the quantum computing puzzle, and even questioned whether the 401k is on its way out.
It's a lot to digest.
It is. We've also touched on the hidden risks of good debt. But hold on, because there's more to come. In the next part, we're going to go deeper into some fascinating trends in the energy sector, look at the impact of AI, and we'll even hear from an entrepreneur who's been through the ups and downs of the business world.
Stay tuned for that. And as always, we'll connect these trends back to you, the listener, offer some insights, and try to help you make sense of it all.
So stick around. We'll be right back after a short break.
Before we move on from debt, I think it's worth mentioning that the sources also highlighted concerns about rising corporate debt levels.
Oh, yeah, that's right. I was reading about that, too. It seems like companies have been taking advantage of these low interest rates, loading up on debt.
Exactly.
And now some experts are worried about what happens if rates start to go up. Could we see a wave of defaults?
It's a real possibility. And, this ties back into the uncertainty around the new administration, too. If they pursue policies that lead to inflation or economic instability, it could put a lot of pressure on these highly leveraged companies.
Yeah, it's a domino effect.
Yeah.
Right. One economic shift can trigger all these consequences across different sectors. Speaking of sectors, let's talk about one that's going through a huge transformation. Energy. The sources point to the massive energy demands of AI as a major driver of change.
Yeah, it's mind-boggling when you think about the amount of power it takes to fuel this AI revolution. Data centers are already using a ton of energy, but as AI applications get more and more complex, those demands are only going to go up.
Right.
One CEO we read about actually believes that nuclear power is the only way to meet those baseload power requirements for data centers in the long run.
Nuclear power. Wow. That's a pretty bold statement considering, the challenges the nuclear industry has faced in recent decades. What makes the CEO so confident in nuclear?
Well, they argue that nuclear energy offers several advantages over other sources. Like, first, it has a high capacity factor, meaning nuclear power plants can run at or near full power for long periods.
Good.
And second, nuclear power is relatively consistent, unlike, renewables like solar and wind, which depend on the weather.
Right.
And that consistency is super important for data centers where any downtime can be incredibly costly.
That makes sense. Reliability is key when you're talking about powering these mission-critical facilities.
Yeah.
But even if nuclear is a good fit for data centers, I mean, is it really realistic to expect a nuclear renaissance? Especially with the long lead times and the regulatory hurdles involved in building new plants?
Yeah, their prediction is definitely ambitious. They foresee a big increase in nuclear power plant construction starting towards the end of this decade, and even more growth in the 2040s and 2050s.
Wow.
They believe that, advances in technology, things like small modular reactors, will make nuclear power more cost competitive and easier to deploy.
So the sector to watch closely then.
Yeah.
If the CEO is right, it could have major implications for energy markets, for geopolitics, even for the fight against climate change.
Absolutely. And speaking of potential shakeups, let's circle back to the Trump 2.0 effect for a moment.
Yeah.
The markets seem to be on edge with many drawing parallels to the early days of Trump's first term.
Right, it's like deja vu all over again.
Yeah.
Some experts think that Trump bump is inevitable, predicting a surge in growth, especially in sectors like energy and financials.
Right.
They point to 2017 when emerging markets outperformed the U.S. by 15% and the dollar weakened. Could we see a repeat of that?
It's possible, but not everyone's convinced. Some strategists are saying that the market may have already priced in a lot of the potential upside. They argue that a repeat of 2017 is unlikely given the current economic climate and all the geopolitical tensions out there.
Yeah, and let's not forget about all the risks on the horizon, too. Rising interest rates, the ongoing trade war with China, and the potential for political gridlock.
Yeah.
It's a complicated picture.
It really is. Navigating this environment requires you to carefully consider both the potential opportunities and the risks. It's not a time for making rash decisions, but for strategic planning and prudent risk management.
Totally agree. It's about finding that balance between optimism and caution. You also included an interview with an entrepreneur in these sources, and they shared some really insightful advice on starting and scaling a business.
Oh, yes, that interview was full of great advice.
Their journey, especially their experience navigating the challenges of iOS 14 and the pandemic, it really resonated with me.
Yeah, one of their key takeaways was the importance of having a financial cushion, a separate emergency fund specifically for your business.
Right.
They emphasize that this is crucial in those early stages when unexpected expenses can pop up and drain your resources really quickly.
Yeah, that's such a good point. It's easy to get so caught up in the excitement of launching a business and forget about the practical side of financial management. Did they offer any specific tips for building that cushion or managing cash flow?
Yeah, they stress the importance of separating your personal and business finances, both for clarity and to protect yourself from liability. They also recommended working with a financial advisor to create a solid financial plan and track your progress.
Yeah, a financial advisor can be a great resource, especially for entrepreneurs who might not have a deep understanding of accounting or tax regulations.
Exactly. Having that expert guidance can free you up to focus on what you do best, building your business.
And it's not just about the numbers either. They also talked about the importance of being adaptable, being able to pivot quickly when market conditions change.
Yeah, their ability to adapt their business model in response to iOS 14 and the pandemic was really impressive. It shows how important it is to be agile and responsive in today's business world.
Absolutely. They emphasize the need to constantly be monitoring industry trends, stay informed about how consumer behavior is changing, and be willing to experiment with different approaches. It's about embracing a mindset of continuous learning and adaptation. I also appreciated their advice on validating your business idea before going all in, talking to potential customers, understanding their pain points, and getting feedback on your solution can save you a lot of time and money down the road.
It's about being smart and strategic in your approach to entrepreneurship.
Right.
They emphasize the need to test your assumptions, gather data, and be willing to iterate based on what you learn. It's a process of continuous refinement.
I've found their emphasis on authenticity and community particularly inspiring. They talked about how building a strong community around your brand and staying true to your values can be a powerful driver of success.
It's about more than just making money. It's about creating something meaningful and connecting with people on a deeper level.
And that's something that you can't learn at business school. It comes from passion, purpose, and a genuine desire to make a difference.
Well said. Now, before we wrap up this part of our deep dive, let's take a moment to reflect on what we've learned. We've seen how the energy landscape is being reshaped by AI. We've explored the potential for a Trump 2.0 boom, and we've gained some valuable insights from an entrepreneur who's been in the trenches.
We've also talked about the importance of financial prudence, adaptability, and the power of community. These are all crucial considerations for anyone navigating the business and financial world today.
It's about staying informed, being proactive, and always seeking to learn and grow.
Now, in the final part of our deep dive, we'll delve into some key market indicators, explore the world of crypto, and tie everything together with some actionable takeaways for our listeners. Okay, so let's wrap up our deep dive by taking a look at some key market indicators, and then we'll explore the world of crypto. One of the sources mentioned a potential head and shoulders pattern forming in both the S&P 500 and Bitcoin.
Yeah, the head and shoulders. Classic technical analysis signal. It often, though not always, signals a market downturn. Definitely something to keep an eye on, but not a guaranteed predictor.
Right, just one piece of the puzzle. What other indicators are people watching?
Well, crude oil prices are on the radar. They've been surging lately, hit a 5-month high.
I saw that, yeah. Seems like worries about supply disruptions and those potential sanctions on Russian oil are pushing prices up.
Exactly. But it's worth noting that OPEC still has a lot of spare capacity, so this price surge might not last. And then there's the possibility of tariffs on Canadian crude oil, which the new administration has proposed, which could further complicate things.
So many moving parts. It's a geopolitical chess game with energy markets as the pawns.
A good analogy. Speaking of uncertainty, let's talk about the VIX, the market's fear gauge.
Right.
One of the sources, a markets and data editor, argued that the VIX doesn't actually measure fear, but rather expected volatility over the next 30 days.
Ah, that's an interesting point.
The VIX is calculated using the prices of S&P 500 options, reflecting the market's expectations for future price swings. A high VIX suggests that traders anticipate a wider trading range for the S&P 500, which can often, but not always, happen alongside market declines.
So it's more about gauging uncertainty, the potential for big price swings, rather than fear itself.
Precisely. A useful tool for understanding market sentiment, but it needs to be considered in context, alongside other indicators.
Okay. Let's shift gears now and dive into the world of crypto. One interesting point from the sources is the increasing correlation between stocks and crypto.
Yeah, it seems Bitcoin, which was once considered an uncorrelated asset, is moving more in sync with the stock market. This might mean that crypto is becoming more integrated into the traditional financial system.
Which makes you wonder about its role as a safe haven asset. If crypto just follows the stock market, does it really offer any diversification benefits?
That's the big question for investors. If this correlation keeps getting stronger, crypto might lose some of its appeal for those looking to reduce risk in their portfolio.
And then there's a whole regulatory landscape, which is still evolving. The outgoing SEC chair talked about the difficulties of regulating this new asset class, emphasizing the need for clear rules to protect investors and prevent fraud.
Right. They also voiced concerns about the potential for systemic risk in the crypto market, especially given the high levels of leverage and how interconnected everything is.
A good reminder that the crypto world, while full of innovation and potential, is still a bit of a wild west. Investors need to be cautious and do their homework.
Absolutely. So as we wrap up this deep dive into the world of business and finance, what are some key takeaways for our listeners?
Well, the first thing is that the business and financial landscape is always in motion. New trends pop up, old ways of thinking are challenged, and uncertainty is a constant factor. Staying informed and being able to adapt is more important than ever.
Absolutely. And there are definitely significant risks to be aware of. Market volatility, geopolitical uncertainty, the potential for disruption from emerging technologies like quantum computing, and the ongoing challenges of regulating the crypto world.
And third, financial prudence is key. Debt, even the so-called good debt, can be risky if it's not managed well. Building a strong financial foundation and resilience should be a priority for everyone.
Couldn't agree more. And finally, continuous learning and critical thinking are essential for navigating this complex, ever-changing world. Being proactive, staying curious, and seeking out diverse perspectives are all essential for making smart decisions about your finances, your business, and your future.
Well said. We hope this deep dive has given you some valuable insights and a fresh perspective on what's shaping the business and financial world today. Thanks for joining us.